Once again, thanks for tuning in. Holly Shields here for kalkinemedia. You probably already know that Gen X or Generation X are people currently hovering around their late 30s to mid 50s bracket. Also called the latchkey generation, they're characterized by high independence, informality, and tech savviness. So why is investing essential for Gen X? Well, this gen must invest because their financial needs are many and often large in size. They have aging parents to care for and probably school-aged children. All this at a time when their retirement is almost there. So when sandwiched between these financial responsibilities, financial strength is a must and investing is therefore essential. So let's have a look at a few things that Gen X must do in investing to safeguard their future. Before we get into it though, please give our channel a sub and hit that bell icon to stay ahead of the game. First of all, knowing their net worth. It's essential to evaluate the excess of their savings, retirement funds, real estate, and other investments over their debts like credit cards and loans. With this step, it's wise to ignore items or assets like cars that may not appreciate. It's also good to ensure that the investment avenues are doing well and fetching fair returns. Given that they are in their prime earning years, they are prone to higher levels of debt and bigger credit card bills. Thus, they must have a plan to tackle their level of debt. Next, having a clear sense of expenses. With the responsibilities of millennials and boomers on their shoulders, Gen X must know clearly where their money is being spent now and what expenses are expected in the future. This is essential for tracking if an investor is on track with the retirement spending goals. Another tip, eyeing blue chip stocks. Blue chip stocks are known for steady returns. These are shares of companies that have grown over the years and are now recognized for their resilience during the market volatility. As a result, these companies give substantial dividends, and investors can be confident about stable or escalating shareholder returns. This means that they can benefit from both higher and more stable dividends, as well as capital gains. On top of that, life insurance is a must. It's an essential part of their total financial wellness. At that age, Gen X must invest significantly in a life insurance policy because it's necessary not just to clear off their debts and expenses of the individual. This amount is critical to contribute to their financial flows of a household in the event of an untimely death of the individual. And lastly, turning to mutual funds to compound the hard-earned money. Mutual funds are a very sound investment option on a long-term basis. Investing systematically with Systematic Investment Plan or SIP in mutual funds is a very useful skill to fulfill in the long-term financial goals by neutralizing the risk associated with wealth creation process. It's useful for compounding the hard-earned money of individuals. Well, now that you're up to speed, check out some of our other videos to boost your financial IQ. And if you like this info, please give us a like, share, and a comment, as well as head to our website at kalkinemedia.com. This has been Holly Shields for kalkinemedia.